Good morning, welcome to IG's early morning call. It's Friday, 24th of March. Let's take a look at the headlines as we wait the start of today's European markets in half an hour's time. Got some breaking news out overnight showing that consumer confidence here in the UK has hit a one-year high. But don't read too much into that. I'll go into the detail. Meanwhile, the Japanese yen up against many other currencies after Japanese consumer price data coming in today above the Bank of Japan's target for a fifth month in a row. And we got the dollar holding on to the weekly losses. As a result of that, we've seen metals prices up. We've got gold near 2,000 again, copper rising to a three-week high above 9,000 again, and indeed the entire candle above that prior line of resistance, which has now become support. Let's take a look at volatility going into the back end of the week. It's going to be clear, I think, that we are seeing volatility lower than we started out the week. You saw that really big spike on Monday that you can see here on the right-hand side of the chart, which actually took us back to levels of volatility not seen since October last year because of the Credit Suisse issue and UBS buying into it at a cheap price over the weekend. Then came this pullback. And since then, we've traded, we're at 23.67. Very difficult to know where we are in terms of the grand scheme of things. But I think at the moment we are looking for what could be a very mixed open in the European markets. Last 2 days of declines, we're above where we were at the low point on Monday. So it looks like we're going to end the week up at least on from the start of trade on Monday on the FTSE 100, where we opened the trading day at 73.57. 74.73 is where we are there at the moment. But I think in terms of the context of where we were as at the cash close last night, the vertical dotted line, you can see we're not quite there yet. But the money is being attracted back into the equity markets at the moment, albeit by a small margin on this 30-minute candle, showing us where we are. But that's still down on from the close that we were at on Thursday's session on the cash trading day. So at the moment, looking for, you can see here, green candle, but we're looking for a small loss at the start of today's session. Germany, second day in a row of gains, looking for a rise at the start of today's session now on the German DAX. Exactly the same sort of thing we're expecting as well in France. Second day in a row of gains there, and we're looking for a stronger start on from the cash close yesterday at 71.13. So that's how things look at the beginning of today's session on the European markets. Overnight in Asia, just to remind ourselves as to what the market moves saw overnight. Losses across the board. ASX 200 down 1/5 of 1%. We're not talking big moves here. Nikkei 225 closing out today's cash session with a drop of just over 1/10 of 1%. Let's soak in what happened on Wall Street last night, and we can see that we saw gains across the board. Small gains so far as many of the stocks are concerned, but once again it was a day when we saw a rise for these technology companies, the technology companies on the Nasdaq. You can see actually, if you look at the chart here, second day in a row of gains. And indeed, if we close at these levels, it will be, let's take a look at the last time we were at these levels on a solid candle. That's going back to September last year. This week, on when we saw that Fed interest rate decision, we saw a spike up to levels there not seen since August last year, albeit very briefly before the pullback. But since then, money has been going back into technology stocks. I think one of the key themes that we've got in this particular sector is that the technology stocks, the growth stocks, the stocks in some cases still aren't earning money, do like it with a fairly benign interest rate environment. Now, so long as the Fed indicates that it's going soft into further interest rate rises rather than the aggressive rise that we saw going to the back end of last year and starting out 2023, I think so long as the Fed is giving a fairly dovish sort of emphasis, if you like, to its activities and monetary policy, I think that's going to be good news for tech stocks. If you're long on this going into the session today, your stop goes below the 12,600 level. 12,767 is where we are there. Now, let's catch up with what's been happening with British consumer confidence rising this month to its highest level since March last year. But don't get carried away. That's the message coming through today from the GfK Consumer Confidence Index. It's risen to a negative 36 in March, in line with expectations, up from a negative 38 in February. Still, the survey showed no improvement in its gauges of personal finances. In the statement, the Client Strategy Director, Joe Staten, underlined that a small improvement in the overall index score this month masks continuing concerns amongst consumers about their personal financial situation, Wages are not keeping up with rising prices, and the cost of living crisis remains a stark reality for most. Let's take a look at what's happening with sterling. This is sterling against the US dollar. It's little moved, 12,279, that's 122.8. The move that we've seen there on the markets reflecting that situation we have there at the moment on from the release of the consumer confidence number. In Japan, the headline consumer price index rising by 3.3%. Oh, that's retail sales. I just want to quickly run through what happened with retail sales in the UK, rising 1.2% in February month on month. Expectations have been for a 0.2% gain. So that flat sterling trade is after somewhat stronger than expected month on month retail sales numbers, still down year on year. Let's move on to Japan. The headline consumer price index rising by 3.3% in February, decelerating from January's 41-year high of 4.3%. The latest figure also marking the lowest point since last September. Core CPI, you can see here on the second paragraph down, 3.1% year on year after 4.2% in January. That was in line with the consensus, which that strips away food and energy costs, hitting a 4-decade high, rising 3.5% year on year if you look at that figure after 3.2% in the previous month. Now, this has done wonders, relatively speaking, for the Japanese yen today. This is the dollar falling against the yen. Now, I want to show you this in the context in just a minute of what's happening with the dollar itself. But at 130.28, we're very close to this line of support I drew here when we saw that candle drop down to the lows on the 10th of February at 129.80. So being supported by the 130 level. This is strength of the Japanese yen. This chart showing a drop here is weakness for the dollar against that Japanese currency. And in fact, if you look at other Japanese crosses, you've got Japan's Japanese yen rising against many other currencies, very close now to levels not seen there since the 3rd of February. So that's the direction of travel for the Japanese yen. It's PMI day today across Europe and the US. S&P global manufacturing PMIs are expected to remain below 50 in March. Anything under 50 is a contraction, or it works its way through into a contraction in terms of the GDP numbers. In Japan, manufacturing activity contracted for a 5th straight month in the month of March. The Jibun Bank Flash Japan manufacturing PMI stood at a seasonally adjusted 48.6 in March from a final figure of 47.7 in the previous month. So it is improving, but marginally, but it is still in contraction. Now let's move on to a different gear and take a look at some of the corporates now. I want to take a look at JD Wetherspoon. JD Wetherspoon did brisk business on the upside at the budget last week when it was confirmed that some of the taxes on a pint of beer in a pub wouldn't be taxed the same way as it is in a supermarket, something that the Tim Martin, the chairman of JD Wetherspoon, has been hammering on about recently. He's seen his company return to profit, full half year profit, I should say. Let's look at the share price chart. Yesterday it was down by a margin of 2.5%, second day in a row of losses actually, but it has been travelling sideways. But I think the direction of travel in the longer term, if I draw you this here, you can see that we have been seeing these higher lows on the whole. And when you get this triangle shape here. The way this normally resolves is this rising line of support holds, and then you finally get a break of what is now here, this line of resistance at 606. Now, if that's the case, and you are long on this going into the start of today's session, bearing in mind that the British pub chain reported a profit of £4.6 million for the 6 months ended the back end of December, compared with the loss in the same period last year. Wetherspoon's returning to profit. I think it's a positive story. If you're long on this, your stop goes underneath this rising line of support, so you're stopping around about the 560 pence level. 578.3 is where we are at the start of today's session. This is the line to break at 606. And if you get a break of that, you're then back then to levels not seen there since the 14th of July. In fact, you can see this high that we saw back on the 7th of March was matched by the high we saw back on the 15th of August. So it's a pretty good line of resistance to get through. This is why I think you'll see a number of attempts to get past that. But when you do get past that, you're then on the way to the £6.50 level for JD Wetherspoon. Smiths Group, let me just stay on the charts because Smiths Group is a interesting company. It's an industrial technology company, but it majors in areas of the world where we have seen a lot of interest, and that is defense particularly, and spying technology. We could be an interesting stock to watch at the beginning of today's session. It posted a 27% jump in first half profit and upgraded its forecast for the full year. Now, that upgrade itself could see a rise in the stock at the start today. We're opening at 1710. And we can see here that we've got this resistance up here at 1807. So that's some distance away. But if you put a line of support underneath these rising lows that we've seen, if you're long on this, your stop would go underneath the sort of 1670, 1660 level. If you're long on this, the company reporting record growth, organic revenue up 13.5%, and the seventh consecutive quarter of growth, equally balanced between volume and price, according to the statement this morning. But the important thing is it's a balanced growth across all divisions, geographic regions, and major customer end markets, according to the statement this morning. But I think for me, the fact that it's come through with this upgrading of a forecast for the full year, that to me is the takeaway from this number out this morning for Smiths Group. Staying on the charts, just wanted to update you on one final area of the equity markets to watch out for. This is a stock of TUI. It's the London listed stock. Yesterday, it closed out the session at 1407. It's announced the launch of a 1.8 billion euro capital increase. Now, it says it's a repayment of state aid, and what the company says will be a significant reduction of the credit lines to strengthen its balance sheet. It's issuing 328.9 million new ordinary shares offered at €5.55 a piece. And if you want to get a search out on the euro equivalent, you have to go back into the German listed stock. We are at 1596 on that. It doesn't seem to me to be relating to the figure of the numbers on which they're selling these shares, but it is potentially a positive stock story at the beginning of today's session. Now, let's move on to other areas of the market. I promised you a very brief look at what's happening with the dollar, because this has had an impact on a lot of what's going on at the moment with these commodity markets. I want to show you this chart because this chart shows you what's happening with the direction of the dollar. We're holding on to the recent lows for the dollar. And what this has done is it's just given us a little bit of an uplift in other areas of the market, spot gold particularly. We are looking as though today, despite the fact we're down by a margin of 1/5 of 1%, we're holding on to yesterday's gains broadly. And yesterday we saw a spike up above the 2000 level again for the second time in a week. Monday, at the Credit Suisse day, let's call that, it was the first spike above that level. And then yesterday's move. I think it's inevitable that we're going to get a candle close beyond that at some point. And anybody that's been long on this with me on this price of gold, just keep on bringing your stop loss up to lock in the profits that you've got. So long as we see the dollar under pressure, I think we're going to get these metals markets showing continued gains. Copper's another one here. Pretty much all the candle today is now above the 9,000 level, and we're currently at levels there not seen since the 2nd of March for copper. So that's how things are traveling there. Staying in the commodities, just wanted to touch on US crude before we take a look at what's happening with Baker Hughes. We're trading above the 70 level for WTI. Last week, the Baker Hughes rig count rose to 754 from 746 the previous week. The number of oil rigs in operation, however, decreased by 1 to 589. Baker Hughes rig count is out at 5 o'clock this afternoon. This is the last time that we see it at 5 o'clock because the hour here across this side of the Atlantic goes back to be properly aligned with the US. Next week it'll be 6 o'clock release. So we're looking at 5 o'clock this evening for the Baker Hughes rig count. We could well see some move in the oil markets as a result of that. That is it. Just a quick reminder that we're back at 10:30 with Charting the Markets this morning. We'll get more detailed analysis with our Chief Technical Analyst, Axel Rudolph, who'll be back with us taking a look at his charts of choice there. Do watch out at the start of today's trade for Wetherspoons, for Smiths Industries, but I think more importantly, the reaction to that news about the money raise at TUI to cover its borrowings over the COVID period. 3 stocks to watch at the start of today's session in about 15 minutes' time.